All right, what's going on, everybody? About to start session one. If you're on here for the very first time, let me know by writing your name in the chat. And if you can be able to hear me also, just go ahead and like this video real quick. So again, if you're on for the very first time, go ahead and like this video real quick and just write your name in the comment box so I can know who's brand new. Also, if you're just like, even if you're just getting on here right now, go ahead and let me know if you're brand new on here or what, so I can even know who's who, because it doesn't really say who logs on. So if you're on here, please write your name because I need to know who's on here. Right? I really appreciate it. So we'll be getting started in about like 5 minutes or so. Nice to meet you. Are you on here for the very first time? Session one, edit. Control. Yeah, are you on here for the very first time? I just want to know. All right, guys. So if anything, I'll just get started. All right. Let me go ahead and share this. So what's going on, everybody? My name is Philip Anglade, and I'm just like I do every single new video. I just explain to you what you'll be able to get access to when you are, if anything, partnering with me. So we have a YouTube, and on our YouTube, you can be able to go ahead and subscribe. And when you subscribe, you can be able to get access to my videos first. These past 2 weeks have been like crazy busy for me. We had an event for my company that I went to this past weekend, and then also I had a training that I was teaching at for a group this last weekend. So it's been crazy hectic for me, and these past couple days, my schedule's kind of been bounced around. So I apologize. Usually I'm very keen when it comes to my schedule, and if I say I'm going to do something, I do it, so I apologize if you've been logging on a Tuesday or on a Wednesday or even on our Sundays. I didn't do it this week, and I apologize for that. So definitely this next coming up week, I should know my actual schedule. I'll be places, but I'll make sure that I actually do my sessions. So Sunday, 9 p.m. Eastern Standard Time. I'll be coming on a Sunday. I'll be coming on to do This Week in the Markets. I'll be coming on at 9 p.m. Eastern Standard Time to do This Week in the Markets. Now, when it comes to Tuesday, Wednesday, and Thursday, I may switch it up, but for now, I'm just letting you know. And the reason why I may switch it up is because um, we actually have a headquarters in Miami, where we invite people to come and see the information of the company that we're partnering with. And with that being the case, can you close the door, please? Yeah. So with that being the case, close it, please. With that being the case, um, Tuesday at 9 p.m. is when I'll be doing session number 1. Tuesday at 10 p.m. is when I'll be doing session number 2. Wednesday at 9 p.m. I'll be doing session number 3. And then Thursday will act just like Tuesday. Thursday, 9 p.m. Eastern Standard Time, and 10 p.m. Eastern Standard Time, session 1 and session 2. Okay, so that's the schedule. Right now, also I'll have recorded videos on my YouTube that you can be able to get access to. Some of them I'll put on the lineup, I guess you would call it, on the Begin Here tab, where you can be able to watch previously recorded videos. And anybody that's brand new, never been on my page like that, if anything, go to this Begin Here section. In my opinion, I think if somebody wants a crash course when it comes to learning how to trade, I think this is like the bread and butter right here, where you'll be able to get like, and when I mean a crash course, like literally you could be able to not really learn how to trade, but be able to get like the basics of the beginning and also the basics of highly advanced trading, literally within these within this video section right here. Now, what I personally do is anybody that wants access to more, or they want the intricate details in between, well, I'm partnered up with a company called IML, and I'm pretty sure the person that invited you on here is also a part of that company as well. And you can be able to get access to not just me being a teacher, but literally 30 other teachers as well that go over content that, in my opinion, is very valuable. So if you want more information on that, you can be able to contact me directly. If anything, you'll figure out a way to be able to contact me if you're not a part of IML. But if somebody already invited you, get back with the person that invited you on here so that they could be able to set you up with all the information that you're looking for. Okay. So I think this is a very good section to go through. Okay, so I'm going to go back to the home portion. Right. So what I also have set up for people is if you subscribe and if you watch all the videos in the Begin Here tab, like each video that you start and comment on each video that you go through, whether it be a question or whether it be something that you've learned every single month. So literally the first of the month is actually coming in the next couple of days. I'm going to be picking out somebody that's going to and mind you, I'm not going to do it personally. It's going to be randomly picked through a program, a website that I have that picks a random commenter, and whoever leaves the most comments has the most opportunity to be able to win a one-on-one personal session with me, where I'm going to be going over the advanced section. And what it is a portion of my You Are the Indicator course is what I'm going to be teaching you. And I know for sure it's really going to help out whoever wins that one-on-one. So I'm going to be picking 5 specific people, and hopefully you are the winner. All right. And what you're going to get access to as far as being able to get updates, we have a Twitter that you can be able to go on to. We also have a Facebook. Right, there's about 2,000 people on our Facebook page. Literally, right when you click on this, it opens up our Facebook, and you can be able to add it to our Facebook, where you also get notifications. From time to time, I write stuff in there. There's about 2,000 people on there because people just have been sharing this like crazy. So if anything, you share this with friends and family members that are also looking to learn how to trade as well. And then what we have access to is a Telegram. Our Telegram has about 500 people in each, and each one of them is for me to send out content, and the other one is for you to be able to respond. Okay, so now we'll get started with what I call session number one. And what is session number one? Session number one, I'm going to talk about how to get into the market, how to get out of the market, what pips are, what lots are, what risk management is, and how to be able to grow your account over time. And what I do here is, probably stuff that you already know, or probably something that's brand new to you. But let's just say that you missed something. Again, you could be able to go to our YouTube and be able to actually watch a pre-recorded video, and most likely we'll be speaking about the same either way. Okay, so all right. All right, so let's go ahead and do this. So let's just say that there's a trade sent out. So what's really cool about the company that I'm partnered with is the fact that you could be able to get trades sent to you. So let's say that you don't really have the confidence as of yet to be able to get into a trade because you're brand new in this industry. Well, when you get started with our company, you actually have the opportunity to be able to actually get trades sent to you. And if it's a good trade, you make money. If it's not, then you'll probably lose some. But the thing is, the more trades that get sent out, the more opportunity you have to be able to actually earn income. So let's just say that there's a trade sent out, and let's just say it's a trade that says buy USD JPY now, right? And let's say it says TP number one is 10 pips from entry. And let's say TP number two is 114.000. Okay. Well, what happens is let's just say TP number one is blue, and let's say TP number two is green, and let's say purple is where current price is right now. And let's say current price is 112.000, right? Well, you expect price to go all the way to the green. You expect price to go all the way to the green, right? And you're buying. What buying means is the fact that you believe that the USD is going to go up, which is going to push JPY, which is Japanese yen, down, right? Now, with that being the case, being the fact that you're buying, you expect price to actually go up. You expect the US dollar to go up. So you expect price to go from 112 all the way to about this 114. Okay. Now, what happens is price may push all the way up there, but price may not push all the way up there. So what people in this industry tend to do is set what we call take profits, and these take profits right here are going to be let's say checkpoints, right? So let's say this is where price is right now. Prices start to push up. Now the thing is, it's not like, and mind you, you're going to get into two separate trades. It's not like these trades are going in opposite directions or moving at different speeds. They're moving at the same speed. It's just that this TP number one that blue one is gonna close out, because that's where you set a specific price that it's gonna close out. Right now, the second one will keep on moving, being the fact that that other one is all the way up here. But let's say price decides to not go all the way up there, but starts to head down. You can just manually close out that order, right? So it makes sense to set up different take profits, because now you made the money, from here to here, right? But let's just say price doesn't go all the way up here. Well, you can make money in between that process. Okay, and that's why we set up different take profits. Right. So what you want to do is you also want to make sure that you get in to these trades right away, right, and not wait. Okay. So again, USD, you expect it to go up. JPY will push down, and with that being the case, you're going to be buying. Now, the thing is, when it comes to your entry, okay, how high do you want it to go up? Let's say 10 pips. You believe that it will go up at least 10 pips up above your entry price. Okay, so let's actually create an entry price. Okay, and what I'm going to do is I'm going to use my phone to show you how to actually get into a trade. And if you do not have this application to be able to actually do these trades, you can download this thing called MetaTrader 4. And if you don't have MetaTrader 4 already on your phone or on your laptop, there's actually a video that I have on here that will be able to explain to you how to be able to actually get MetaTrader 4 on your phone or on your laptop. All right. So just go to the section that explains how to be able to do that on my YouTube, which is the getting started, on the getting started portion. So, and I just had to make a new account real quick. All right. All right. There you go. All right. So this is what the MetaTrader 4 looks like. And mind you, this is the application right here, MetaTrader 4. You'll download that, right? And once you download that, you're going to have different pairs that pop up, right? And as you can see here, it says USDJPY. So what you'll do is you'll click on USDJPY and then click where it says trade. And what you want to do is you want to make sure that that number one, you're in the right pair. Number two, if it says, get in right now, it means market execution, means you're executing your trade at the market price. And you also want to make sure that you're at the right lot size. Okay. And then from there, what you want to do is you want to click where it says buy by market because you want to get in. And then what happens is you want to make sure that you get in again right now as well, because you want to get into two separate trades. Now, why? Well, as you can see here, it's take profit number one and take profit number two. So you want to get in two separate trades right away. Okay. And once you do that, what happens is you're going to have entry prices. So this right here, it's always to the left side of the arrow. So this right here is your entry price, and this right here is your second entry price. So as you can see, they're two different numbers. All right, it's not like a huge difference, but it is a difference. And over time, it may make a difference in the future. So what I want to do is I want to write down the first one. So 113.617. All right, so I'm going to write that number down. So 113.617. All right. So here's the thing. When it comes to these numbers right here, each portion of the number makes a difference. What do I mean? Well, the number that's all the way to the right is just too small of a number to really pay attention to. So we're just going to kind of cancel that out. And this number right here, right, it's called the single digit pip. And what do I mean by that? Well, it moves in single digits, like 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. And then this is the 10-digit pip. So it moves like 10, 20, 30, 40, 50, 60, 70, 80, 90. And then this is a 100-digit pip. 100. Right? So it moves 100, 200, 300, and so on. Right? So these are the numbers that we pay attention to the most. And another way that you can be able to also realize which ones are the single digit pips and the 10-digit pips is by going make a portrait. What the heck did I just press? What is that? Oh. All right, so another way that you can be able to realize which one's which is by going over here. So you see how there's a small number right here, small number, small number, small number. The number all the way to the right are all small, except this one right here. Let me just take this off. We don't even trade copper, at least yet. All right, so you see all these these small numbers right here. These numbers right here are just too small to pay attention to. And then the number right next to it, single digit pip. 10-digit pip. You see there the bigger, right? Same exact thing right here. I'll explain that these numbers right here, the numbers that we pay attention to the most. Same thing right here, right? Same exact thing right here. Well, this push down hard. One moment, I'm sorry. Wow, check that out. Oh, it was worse. Oh my God. Interesting. Sorry about that. All right. Um, so yeah, same thing here. So now, again, so 113.617, right? So here's the thing: when we expect the price to go up in value, how much do we want it to go up? 10 pips, right? What's the number that we don't pay attention to? That number right there. So what we're gonna do is we're gonna add 10 to that number, right? So essentially, our take profit, that's what we call it, take profit, is just 10 plus that 61. So, what's that number? 113.71. And then we just put that number back in, that last 7. So that is our take profit, right? Now, stop loss is like the opposite of a take profit. We just don't want it to go past some area, right? Let's say 20 pips, for example, right? So what I'll do is I'll just subtract 20. So we add 10 on that side. So subtract 20. So now it'll be 113.417. And that's our stop loss. Okay. What we'll do is we'll literally take this number right here and take that number right here, and then we just enter it into our phone. So I'm going to go to this pair right here, and as you can see here, there's stop loss, and then there's nothing there. Take profit, and there's nothing there. So what I'll do is I'll hold on to that pair, click where it says modify, and then where it says take profit, I'll put in that number right there. So I take profit, I'll delete all the numbers, and then put 171. Then for stop loss, I'll just put that number that we came up with right here. And then I'll click where it says modify. And as you can see here, now those numbers are there. If I was to hold on to the order, click where it says chart, then I'll see those numbers. If I zoom in a little bit, I'll see them even more. Wow, look at this bull run. Oh my gosh. That is crazy. All right, so what we see here is we see that I know that you can hardly see it, but it's just the fact that price hasn't made a move like this in so long, so it's probably gonna be hard to see. But it says right here buy 1.0. That's when we got in, and then it says TP right there. So we believe, okay, if price goes up, hits that TP, then we'll make money. Now, if price goes down to that stop loss, then we'll lose whatever that is. Okay, so that's that. So now we have this TP number 2 right there, right? And that TP number 2, oh man, I need my charger. This TP number 2, we're literally just entering that number, right? I'm just gonna show you how to do that. So we'll just enter in that number for this on the second one. There's nothing there. So we'll hold on to that, click where it says modify, and then from there, we'll just enter in that number. Take profit, stop loss, we'll put in that same number that we came up with from before. Click modify, and then they're there. Right? And then when we go to chart, we'll be able to see the second take profit higher. As you can see now, there's two take profits, one there, and then there's one right above it. All right, so that's that. Okay, so now that's for a buy, right? So now what I'm going to do is I'm going to go look for a sell. And oh, before I even take this off, go ahead and take a picture of this real quick. So go ahead and take a picture of this. Hey, put it in there. All right. So now what I'm going to do is I'm going to look for a sell. So let's say there's a trade that's sent out to you from our company that says sell EUR USD now. Okay. And let's just say from there, it just says one take profit. So one TP says 10 pips from entry. Now here's the thing. What we got to do now is we got to figure out our entry price, remember? Right? So now this is a little different. When the left side of the pair is going down, that's pushing the right side of the pair up. So you'll actually make money this time when the price is going down. So your TP is going to be below your entry price. And how much do you want it to be below? 10 pips. So let's go figure out what our entry price will be. So again, you go to quotes. From quotes, search the pair that you want, EUR/USD. Click where it says trade. Make sure that you're in the right pair, market execution, right lot size, and then click where it says sell by market. And then from there, now you're in. Remember, it's always to the left side of the arrow, right? And with that being on the left side of the arrow, now we'll write that number down. 1.16438. 1.16438. And again, remember the number that's all the way to the right, too small. This number right here is a single digit pip. This number right here, 10-digit pip. But these are the numbers that we pay attention to. And then with that being the case, we want the price to go down this time. How much? 10 pips. So what we'll do is we'll take that number, that 1.16438, and pay attention to these. Subtract 10 from that now. And that number for our take profit is 1.16338 is our take profit. Okay. A stop loss. Let's say we don't want it to go up 30 pips, for example. What we'll do is now add 30, and then it'll be 1.16738. That'll be our stop loss. And then we'll just put those numbers in the same way. So go ahead and take a picture of that. And this diagram should really help you out. All right. right, so now what we're going to talk about is what we call stop loss. Lot size. All right. So the lot size is what is going to be able to change the amount of money that you can be able to create, multiplied by the amount of pips that's moved. Okay. So this right here is your lot size, that 1.0. Right. Now the smallest lot size that you can be able to get into is 0.1. Let's say, I did that. You're going to see that's going to move in pennies, as you can see here. Let's say the next size, you'll see this moves in tens of pennies. And let's just say the next one, what we call a standard lot, is the one that we got into from before. You're going to see it's going to move in dollars. And you're going to see 10. You're going to see this is going to move in tens of dollars. Okay, and then we have what we call 100 lot. And it's going to move in hundreds of dollars. Okay. Now, obviously, you're probably wondering, well, man, I might as well just do the 100 lot every time. Yeah, you're right. Well, you need a certain account balance to be able to do these high lot sizes. So the higher your balance, the higher your lot size. The lower your balance, the lower your lot size. Okay. So let's go ahead and figure out these lot sizes completely. So 0.01, let's say that moves 10 pips. Well, that is moving $10. And that's that's moving $1. That's plus or minus. Let's say 0.10 lot, 10 pips, $10. Say one lot, that moves 10 pips. How much do you think? 100. 10 pips, 1,000, and then from there 100, 10 pips, 10,000. Okay. Now, here's the thing. What's really interesting is the fact that yes, you can definitely make a lot of money in this game. But I think what's really cool is the fact that in this, you could be able to just get 10 pips over and over and over and be able to build your account, right? And all you need is $100 at this lot size, 10 pips to make $10. And then let's say you're making 10, 10, 10 over and over and over, then you can be able to have that $1,000 that you need be able to go into this lot size and then keep on going. Now, how quickly can you be able to make 10 pips? Let's check it out. Some point in time, you'll use this website called TradingView, and I have videos that explain to you how to be able to, your TradingView and be able to set up your charts and all that stuff, right? So let's go to EURUSD, right? Let's just say within 30 minutes, how many pips you can be able to make in 30 minutes. You see this candle right here? It's a pretty large candle, but let's just say we looked at this one. From here to here, 30 minutes. So it did 31 pips in 30 minutes. Let's just round it to 30. So 30 pips in 30 minutes. Pretty interesting. So let's just say we multiplied it to 1 hour. So 60 minutes, 60 pips. So $60 minutes, 60 pips. Well, essentially, if you were at this lot size right here, you would have got 60 pips, which means $60 in 60 minutes. So who do you know is making $60 an hour? What did they have to go through to get that? Let's say if you're at this lot size, you would get $600 in that 1 hour. This lot size, $6,000 in that 1 hour, and then this one's $60K in that 1 hour. Right. So, I was always taught, get good at something worth getting good at. I think this is worth getting good at, because once you're good at this, you don't have to do much anymore if you don't want to. Me, I still want to do stuff. I want to help out my fellow man by building things or creating things. Maybe you have different ideas, but let's say you're making 60 grand in an hour. Think about how many people you can do to help. That's how I think about this. So go ahead and take a picture of that. And what I would definitely also do is pick up this book called Think and Grow Rich. Right? And whenever you have a story to tell, go ahead and let me know. I'd love to hear your story. All right. Now we're going to talk about what we call risk management, and I think risk management is the most important thing. Okay. So the risk management that we're going to follow together is a pretty conservative risk management, but I think it's good. So 2% risk management. Okay. Now, the more your patience, the higher lot size you can be able to do. The less your patience, the lower lot size you got to do. Okay. And you'll be able to gauge yourself. So, give me that paper that has the formula on it, please. So, this is how it goes. For every $1,000 you have in your account, you'll do a 0.2 lot size. Okay. For every $500 you have in your account, you'll do a 0.10 lot size. For every $100 you have in your account, you'll do 0.02 lot size. For every $50 you have in your account, thank you very much. For every $50 you have in your account, 0.01 lot size. Okay. Now, let's do a for example thing. For example, let's just say that you had $2,550 in your account. Right. What lot size would you do? Well, remember, for every $1,000 you have in your account, you do a 0.2. Well, how many thousands do you have? You have two of them. Okay. So, if anything, I'm going to take this out. I'm going to take this one out without confusion. Okay. So just 1,100 and a 0.2. I think that'll just work like that. All right. So, so again, for every 1,000 that you have, you do a 0.2. Well, you have 2,000s, right? So essentially, it's going to be 0.2 times 2 equals 0.4. Okay. So now for every 500 that you have, for every 100 that you have, you do 0.2. Well, how many hundreds do you have? Well, and you do a 0.2. Well, you have 5 hundreds, so it's going to be 0.10. Okay, And for every 50 that you have, you do a 0.1. Well, you have one of those. For 50, you do this. You have one of those. Equals 0.1. Right? So altogether, right? So this is 0.15. I mean 0.51. Okay, that's that. Now, I actually came up with a formula that you can be able to do for anything. So I don't even know if this is going to make sense to you, but I don't know. I came from a background of engineering and just stuff in this. So for your account size here, so so your account size, whatever it is, it could be any number, right? Divided by 100 times whatever risk management that you want. Right? So your account size divided by 100. So you do that first, multiply that by your risk management, and then you're going to put whatever your stop loss actually is over 10. That's going to tell you your specific lot size. Okay. What does that mean? Let's just say that your account size is $2,550 and I want a 2% risk management, right? So it's going to be 200. So let's say my account size is $2,550, right? First, what I'm going to do is I'm going to divide that by 100 and give me this. Multiply that by your risk management. So my risk management is a 0.2%. I mean, it's going to be 2%, which is this, right? Now take that number and divide it by your stop loss. So you're going to take that number and now you write that down, 0.51, right? Now your stop loss. Let's say my stop loss was 10, right? Say my stop loss was 10 and now divide that by 10 equals 1 in this case, right? So 1 divided, anything divided by 1 is itself, right? So that's it. But let's say my stop loss was 20, right? It's going to be, stop loss 20. This divided by 10 equals 2. Now I'm going to take that 0.51, by that by 2, and this is going to be my actual lot size this time. So your lot size actually depends on your stop loss. I don't really explain too far in that because it could be kind of confusing. And there's actually a website that you can be able to do it on, but you can do it yourself by using that. All right. So let's just say, for example, you had let's say that you had I don't know, $850 in your account, right? Well, again, remember for every $100 you have in your account, you'll do a 0.2, right? So 0.2 times 8 equals times 8 equals right? Yeah. Okay. Oh, 0.02. Sorry, because I'm like, no, that's too big. 0.02 times 8 equals 0.16, and then this times 1, this is only 150, right, equals 0.01. So that together equals 0.17, right? Now, let's just say that you had a 20 pip stop loss, you divide it by 2. Let's say you had a 30 pip stop loss, divide that by 3. And then so on and so on and so on, right? So go ahead and take a picture of that. Oh, I could just make it small like that. Jeez. So go ahead and take a picture of that, right? This right here may be kind of confusing if you're not really like the math type, but you can figure it out, right? So, that's my content. I have more that I could be able to share with you. But if anything, I know for sure what you can be able to do is you can be able to go on to our YouTube, and on our YouTube, go ahead and subscribe, because whoever subscribes is going to be able to have the chance to be able to have a one-on-one with you. And the way that you have that one-on-one is by watching, liking, and commenting on each of the begin here section. Because I know for sure, like I know for sure anybody that has a one-on-one with me wins. And I'm not saying that just because, I'm saying that because the results are in the pudding, or the pudding is in the results. I don't know how it goes, but greatly appreciate your time, guys. I'll be back on here to do session number 2 in the next 10 minutes, right? So get back on here, and believe me, guys, like if it wasn't for you guys logging on here, I wouldn't have a show. So I really appreciate you guys taking out the time to come on here and spend your time with me. So any point in time that you have any questions, you can always leave me a comment or write me directly. And if anything, I'll see you on the next video. So I really appreciate your time, and let's become legendary. Let's get it.